I would now like to hand the conference over to Mr. Aseem Pant, VP Investor Relations. Thank you, and over to you, sir.
Thank you, Janice. Good morning and welcome everyone. We would like to thank you for joining us on the call today, and I hope that you and people around you are safe and keeping well. On the call today, we have members of our senior management, including our MD and CEO, Mr. Sanjay Agarwal, our Executive Director, Mr. Uttam Tibrewal, our Chief Operations Officer, Mr. Deepak Jain, our Chief Risk Officer, Mr. Mayank Markande, our CFO, Mr. Vimal Jain, and our Chief of Strategy for Business Solutions and Transaction Banking and Head of Credit Risk for the bank, Mr. Vivek Tripathi, as well as other heads of businesses who you might have interacted with in the past, and I would request them to introduce themselves as and when they answer your questions. Before we move into Q&A, I will take a few minutes to share our on-ground experience and approach in the quarter on a few aspects. At the start, I'm pleased to apprise you that we recently concluded our 25th AGM, which was our first virtual AGM and a key milestone for us. And we would like to thank our regulators, board members, depositors, shareholders, and other stakeholders for their continued faith and support in us. On the macro front, we continue to live in unprecedented times amid the ongoing COVID-19 pandemic, and it is difficult to say when this will end. Nevertheless, compared to our last interaction on 4th May, the situation on the ground has been improving, more so in semi-urban and rural areas compared to metros. During the last 2 months, as we moved from lockdown to unlock, we have seen a steady pickup in our operations. The number of employees in offices and field has improved to 93% by June, and we are seeing very good energy levels. A special mention of the 14 COVID warriors who fought COVID and recovered completely, and our best wishes and support to the 27 employees who are currently recovering from COVID-19. We also extend a big salute to all AU employees for their commitment, courage, passion, and positivity during these difficult times. More specifically, in relation to our business, I would like to highlight 3 key points. First, engagement with our borrowers. Our focus in the last few months has been to understand the borrower situation and explain to them how Moratorium works and its financial implications. Driven by our approach of being close to the ground and enabled by technology, our entire sales, credit, and collections team joined forces to connect with respective borrowers, specifically mapped to each of them on the ground as things opened up. The experience, especially in June, has exceeded our expectations as we saw that borrowers choose to come out of Moratorium despite having the right to opt for it. Based on ground experience so far, we expect further improvement in July. That being said, we believe Moratorium remains an evolving situation and customer behavior is changing every month. Therefore, while in Q1 asset quality trends have indeed shown improvement, we expect to have a clearer picture post-August once Moratorium is lifted. In terms of growth, we expect it to gradually pick up as both borrowers and ourselves remain cautious with regards to the outlook. At the same time, we remain vigilant and close to the ground to meet borrowers and assess their needs and meet them basis our assessment. Second, strengthening our branch banking franchise further. Being an essential service, all our branches were open throughout the lockdown except where there were any intermittent local challenges. And key transaction metrics have been picking up substantially. During the quarter, we remained focused on making our deposits franchise more granular, and share of retail deposits has now increased to 45%. During the quarter, we also planned an outreach program to help senior citizens and assisted in meeting their daily needs, including procurement of essential items. Further, we use these difficult times as an opportunity to leverage our 17,000 employee base to raise deposits. We conducted virtual trainings on liability products for all bank employees and enabled them to open accounts digitally, which has effectively turned our non-branch banking staff into all-rounders. And this has opened up new opportunities for us. We continue to refine our approach in branch banking and have enhanced our focus on quality acquisition and deeper understanding and engagement with our existing customers. Based on our learnings, we have segregated our markets into core and urban, with an aspiration to be a leading player in the core market by leveraging our asset dominance there. To add a bit more color here, By core, we mean smaller centers in rural, semi-urban areas, which typically have a local economy built around agriculture and small businesses, and where we typically lend in. Larger centers which have more advanced infrastructure such as malls, airports, etc. are defined as urban. We see significant opportunities for us to grow in both of these markets, though with different strategies adapted based on our strengths and resources. In this respect, it is indeed encouraging to see that as on 31st of March 2020, 26 of our branches were above 5% market share of total banking system deposits in their respective centers. Thirdly, strengthening our balance sheet further, we continue to adopt a cautious stance in terms of liquidity management and have created adequate liquidity cushion in this uncertain scenario. We have also made additional provisions related to COVID-19 to fortify ourselves against adverse asset quality outcomes that could arise due to the ongoing pandemic. To conclude, we believe the bank's performance has been satisfactory given the challenging context. We wish you good health and hope for better times ahead. Being into essential services, we remain deeply committed to serve our nation and society with unwavering dedication and agility. With that, we will now open the floor for questions.
Thank you. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question, please press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Question from the line of Shah from
there is a lot of operator, there is a lot of noise and disturbance.
So it's from the Jaipur line connected.
Bharat, you can speak, but we are listening.
Yeah, okay.
Hi.
I must say, I think this is a remarkable performance in very, very difficult time. It's not easy to take so quickly in such uncertain and challenging times. So, really remarkable achievement by AU team under your leadership. One key issue that I wanted to touch base on all aspects, whether asset quality, the cost control that has been exercised, other parameters of ROA, everything has been robust. On the fee income, the core business fee income, I wanted to have some understanding. That number, understandable in a challenging quarter where disbursements are difficult. But would you throw any light as to how you want to ramp it up? Because that number kind of fell short of expectation.
Yeah, Bharat. So good morning. I hope everybody is safe and healthy. Again, as we all know, these are very uncertain, unprecedented times for everybody. So in last full quarter, literally 70 days, nothing was moving. But AU kept their head high, energy high. So what we done in last quarter was only around do some collection, do some engagement with the existing customers, whether it was a deposit customer, whether it's a loan customer, So disbursement never happened, honestly, and we never tried also. Because nothing was clear on the ground, neither customer was coming and looking for credit. Actually, everybody was looking to look more into terms of stability, and whether we can continue our business, whether the whole continuity comes back. So I think in last 90 days, whatever we have done, it is just an shadow of what we are doing from last 3 years, and it really helped us. Our past really helped us to get this kind of numbers this quarter. So I would say, if you really see our collection efficiency, the whole activeness around borrowers kept on increasing month on month, right from April to May and June. That is very encouraging for us, because as of now the whole idea is to really maintain that quality, maintain the customer, maintain the whole NPS, right? So that we are doing fabulously well, honestly. The second priority was to keep your team morale high, because there was a lot of challenge around the whole the narrative around COVID, right? So we done that also very well, and fortunately nothing adverse happened in AU as of now. So I would say so far so good. Other thing, liquidity flow, lot of liquidity happened because there was no disbursement. RBI also put in a lot of money in system. So in that also we actually had to keep more money being an SFB to manage our whole scenario around liquidity, right? So, and of course, when you are not doing any business, so, and our cost is around 70 fixed, 30 variable, that saved us a lot of money in this quarter, I won't say it is a deliberate attempt. It just happened because no incentive was paid to the system, no incentive was paid to the vendors or dealers or your associates, so, and no traveling happened. So naturally there was a lot of expenses were reduced, right? So, and of course the drag can be the asset growth which you are talking about, but we never attempted, honestly. And we really took that quarter as a quarter of learning, how we really want to build a quarter 2 and quarter 3 from that learning. Of course, still I would say the clarity on the portfolio is still not clear, but signs are good. We have done a better job around that. And of course, we have to also bear the cost of additional liquidity. So I think these are the broad parameters, but I would say as soon as growth comes in, as soon as disbursement start happening, our other income will be again stable, right? So I would say I'm very satisfied around the way the whole thing ended in June end. Actually, it was a nightmare in April and May, but how we done our closing in June is giving us good, encouraging, and good kind of energy to move forward with more positivity.
No, without doubt, that is what I said, Sanjay. This is a remarkable performance in extremely trying and challenging conditions. Make it move around so many parts is never an easy affair. So full congratulations to you and the team. My question was more on a longer term basis. Other income or the fee income is a very strategic part of a bank's income. And to create a multiple streams through which the fee income can be extracted can keep a pretty, over a period of time, it gives a strategic balance to the lending activity, and it creates a possibility of an improved return on equity. So from that perspective, I was saying, I understand in particular it obviously was very challenging. But from a longer term point of view, core other income stronger footing. That was the comment. And secondly, when do you think we'll be ready for growth?
So, Bharat, two questions. So, the first one, right? As you know, the whole SFB design has happened around do inclusive banking, right? So we have certain obligation to fulfill for next 18 months, which is around the loan size lesser than 25 lakh and blah, blah things, IT sector more than 75%. So the whole motive of SFB is to do inclusive banking, then to only earn, honestly. But I take your view, and we already had insurance. We already had a third-party wealth product. We already had a PSLC. We already had a treasury operations. So in that sense, I would say bank is complete. And we have to reinforce. So for example, we might looking for more partners in insurance rather in life and motor and health and in whatever way. So beyond a point, honestly, AU is not thinking to build a more fee line, because we really want to focus on our core, which is our lending. into the semi-urban and rural markets where the whole purpose of SCB is. Yes, we will come out with, some product like credit card, right? Because we feel that the rural India, the semi-urban markets has a lot of potential. But I think that also will take some time to really get the real ROE benefit on AU balance sheet, right? So honestly, we don't have large options like universal banks. But I'm pretty happy because if you really see Bharatbhai over the years, AU earns more from their assets rather than the other income, and we really want to continue that thought process till we become universal. And so that's one thing. Second, your question around growth, I think it's so difficult to predict as of now, because we have just completed a good 70 days of maybe 50 days of the unlocking, right? And still you see a lot of challenge around the normalcy, some states goes for another lockdowns, But the hope is this, that, the confidence of people is coming back, and particularly our area of operation, we are having only two challenges. One may be in Pune, one may be in Mumbai, and one may be in Surat, right? Other than that, entire our operation is back on the road, people are coming to their offices. So I feel it's a first step of people coming to their office. Now, second would come when they will look for the growth, So once they look for the growth, bank growth will happen, So I would say I will take this quarter one more to really comment on our growth prospect. But one thing is sure, post this pandemic, lot of things will change, whether it's digital, whether it's about building your own business again, new opportunities, and AU will be there to handle those opportunities, because we are becoming more and more stronger in terms of our franchise, and this kind of pandemic, this kind of event actually makes you more strengthful, to handle crisis. So I'm very hopeful that once things become normal, AU will be one of the few banks who will take that opportunity, in a right spirit.
Sure. No, I appreciate. One last point from my side. While lending, of course, remains a core to AU, and that is the way AU has built itself over a period of time in its core markets. But I would say as AU gets bigger, the opportunity to create income, several income streams out of insurance products, investment products, and payment products. I think those three, expanding various verticals within each space and deepening each of the spaces, I think is a worthy idea in my opinion. But of course, you are the best judge of the situation.
So, Bharatbhai, I'm saying insurance, investment, and payments all are key focus area for us, But we do have to do other things. We have to build deposits, we have to build assets. So, and being in a new bank, it's not easy to sell investment products. People need to convince around brand first, and then took all these products. So I think we have already put a lot of foundation around it, but need little bit more patience to really get to the next level around it.
No, hearty congratulations again. This is a remarkable feat of performance. Thank you, Sanjay, and all the very best.
Thank you. We take the next question from the line of Karthik Chellappa from Buena Vista Fund. Please go ahead.
Yeah, thank you very much for the opportunity, team, and congrats on a great quarter. I have two questions. If I were to just look at our loan mix, especially in the small and mid corporate segment, one segment that has seen significant degrowth year on year is the NBFC segment, around almost 40% year on year degrowth. This is despite the collection ratio in NBFC actually doing pretty well, almost crossing 100% in June. So just wanted your thoughts on why is this segment seeing a lot of defocus and the collection trends are actually positive.
So Vivek here, NBFC, as you would know, that last 2 years, post September 2018, actually things have been very, very different, right? The entire space has gone through a lot of confidence crisis, liquidity issues, and ALM issues largely on the mid to larger side balance sheet. So it's not that we didn't want to be there in this space, but for us it was never a franchisee business. It was always driven by opportunity, and we continue to lend. We continue to evaluate proposals based on purely merit. So as we speak today, NBFCs are sitting with large amount of liquidity because of TLTR support, dual support from SIDBI, NABARD, NHB. So the entire space, even the smaller ones, got enough liquidity. So there is a couple of prepayment and foreclosure also happened in this book. It is not a complete natural rundown of book. It is also that some of the entities preferred to repay because they were sitting on a surplus liquidity.
Yeah, Karthik, one more to add to Vivek's view that we being a bank, we don't have focus on NBFC funding. We were doing as NBFC from 2015, but once we became bank, we thought that overall relationship around NBFC helps us to build banks. It's not only about lending, it's about non-fund based, the whole enterprise salaries, the banking of the promoters. So we took that view. That is why we are doing NBFC funding. And overall also we have capped the 10% on our cap. There is a cap of 10% on the total asset around NBFC funding. So if we get the right kind of cases, right kind of borrowers, we'll be doing that. And but our prime aim is to really do that retail lending, right? So that's the way you want to build their future.
Okay, very clear, Sanjay. The second question is, if I just look at the wheel segment where the collection ratio is hovering around 83% for June, could you give us a sense of at a sub-segment wise, which are the segments that are significantly below this average and underperforming, either from a segment or geography perspective?
Yeah, hi Karthik. My name is Bhaskar and I look after wheels. It is essentially the commercial passenger segment, which I here broadly get categorized as the car taxi, which is the one which is a little lower than the normal average. And that also is a little more in Bombay, Delhi, Pune, Ahmedabad, vis-a-vis the rural market where we generally operate. And it is more about it's a little more about uncertainty, lesser to do from a crisis point of view. It is just that temples are closed, marriages are not happening, people are not moving, and hence so are the operators wanting to just be, let's call it cautionary, and they want to keep the money with them, not that they have a lot, but then they just want to hold on till normalcy comes. So that is how it breaks between geography, and that's how it breaks between profile.
Excellent. Just one further point to Sanjay ji and his team. The disclosure on the collection month-wise is very, very useful. So that's fantastic. Thank you very much for that. But there was a lot of other disclosures which we used to give out in the past, like, disbursement segment-wise, gross NPA segment-wise for wheels, SBL, etc. That was missing this quarter. It would be nice if from the next quarter, even these details are made available so that it's useful for our tracking. That's all from my side. Wish you and the team all the very best for the following quarters. Thank you.
Thanks, Karthik.
Thank you. We take the next question from the line of Amit Kumar Premchandani from UTI. Please go ahead.
Thanks for the opportunity, sir. Just wanted to understand the difference between slide number 25 and 26 in terms of collection efficiency.
Yeah, you can go ahead with your question.
Vivek here. The slide number 25 talks about absolute collection efficiency excluding any foreclosure, and we've given product-wise details. What was the billed amount and what is the collection of month of June? And it also gives comparison vis-a-vis of April and May, how the things in the collection efficiency at the overall level as well as the product level moved. Wherein the slide number 26 talks about in terms of my absolute percentage of gross advances in that book, how much of that paid in month of April, month of May, and month of June. So it talks about customer activation, actually.
So just to understand, in case of SBL, while 55% was the number of full in April, which moved to 67 in June. But if you look at slide 25, that number is 95. Why is this difference?
Yeah, so these are two different things, right? You can't correlate with activation with the collection efficiency. So 95% denotes that out of the 223 crore we need to receive, we got around 211, right? So there would be a customer would have paid you all three installment also. So it's a total collection and it's a number of customers. So you can't correlate with the customer activation versus collection efficiency. So collection efficiency generally we get around 95 to 100% every month in a normal time. So we want to tell you all people that in the month of June that percentage is 90%, right? Of course, there was a lot of overdue in the month of April and May, but that also helped the collection efficiency to be 90%. But I think the customer is coming and paying in the month of June, which is still in moratorium, is a sign of resilience. It's a sign of normalcy, right? And in terms of customer activation, 67%, that in that particular month, June, 67% of the book were paid at least one EMI.
So to put it simple, if we take example of SBL, it says that 67% of customer in June had paid actually 95% of money in month of June.
So just to get from a clarification point of view, you billed 223 crore and you got 211 crore, so 95, that is fine. In June, the next slide, 67%, the bill number is same as the EMI number?
No, I'm sorry.
By number of customers.
This is by number of customers.
No. See, let's say 100 crore of my, SBL book is 10,500 crore, out of which 6,000, 800, 900, close to 7,000 crores customers have paid me EMIs in the month of June. How much was the EMI which was paid, which was 211 crore, on an overall book, there was a billing of 223 crore, considering that there was no moratorium given to any of the customers.
So just to make it more understandable, like if there is in a normal time, generally 80% of the books were paid in every month, and in this June it is around 67%. So idea was to again communicate to you people that the normalcy is coming, because if a normal month 80% books were paid, we're getting 67% now, right? And we expect in July and August this 67 touching maybe around 72, 73 in July, and maybe 76, 77 in the month of August, if everything remains like what we are seeing as of now, right? And this collection efficiency can be around 100% in the month of July itself, right? So this means that the customers who are able to give, who are able to sustain, is paying, right? And of course, there are certain groups like 10% of our book which is not paying. It still has to be addressed.
So the disclosure are very good, and thanks for that. I was just trying to understand. Another question was, sir, on the disbursement side, you have given overall disbursement number, but any specific reason why have you not given the other disbursement number, the breakup, and if you can just share it with us now?
So we will share you offline, but the whole idea is to tell you guys we never focus disbursement. So if you are not showing that means it never happened, honestly. So I would say it is more of a TLTRO, it is more of an OD against FD. We done close to 300 crores in the retail asset, maybe to 300 crore around SMEs. So honestly, it is just 30%. So we thought because we never focused disbursement this month. I think no company focused, honestly. So it's not about selling anything. We can share with you offline. So that's the number, right?
Thank you, sir. That's it for me.
Yeah.
Thank you. We take the next question from the line of Anita Ranjan from HSBC Asset Management. Please go ahead.
Yeah, thank you. Just wanted to understand in terms of like collection efficiency, the numbers which you reported for June, like close to 90%, and some sectors are even like close to 100%. What is the difference between you and the industry? Because at the industry level, none of the players actually have reported such strong collection efficiency. Do you think it's a definition of the business or it's a definition of a geography? Can you throw some light over there?
I'm sorry, I was sorry.
So I will not be able to, Vivek here, I will not be able to comment exactly how industry has reported. What we want to say that team was there on the field, and if you see our numbers in April and May, vis-a-vis April, May, June numbers significantly improved because businesses got open, people who were holding back the money, and there was obviously a comfort and posturing that, what will happen, uncertainty in the mind. A lot of that uncertainty would have gone out. So that people have paid, maybe instead of clearing the June month EMI itself, they would have cleared April, May as well. So instead of opting for a complete, 2 months or 1 month moratorium, they would have done a calculation on the actual interest outgo would be over the period of loan tenure, etc. So they would have paid. As far as the product-wise this thing is concerned, we've already given complete breakup.
Mm-hmm.
The performance in terms of geography, if I have to take a two larger books, which is Wheels and SBS, which is a larger billing book as well. So there is a difference of between semi-urban and rural market, but that difference is more from an activation point of view. Collection efficiency point of view, that difference is not much. But yeah, customer activation there is a still gap of being metro. There are actually very, very small book lies. There is a 15-16% difference of customer activation between both the geographies.
Yeah. So I just want to add here because a lot of credit should go to the team also, and one advantage we actually enjoyed that we being a Jaipur headquarter bank, our approach was always to really not to sit at home or work from home. We actually build an environment where people were really confident to operate from office. If you really see our whole activation of employees over the month, in April we were around 30%, and in May it was around 60%, in June it was 95% people working from offices, right? And the semi-urban rural markets really opened up from the 20th April onwards. So I think we built that momentum, and which really helped us in the month of June. And we actually told our customers that, we are there to help you out in case you need money in future to come. But why you want to hold your moratorium, because it will actually have your additional cost. It is not free. So I think a lot of people got convinced, and I think a lot of companies which got on the field in the month of June, I would say they got a similar kind of collection efficiency.
My apologies. I couldn't hear what you said.
Yeah, so just one more question. Also, can you just throw some light on your liquidity, like in terms of what are the, you have your balance sheet liquidity, but also in terms of your liability and your ALM profile?
Hi, this is Yogesh Jain. So I think liquidity, as we mentioned in March, disclosure also that we were maintaining liquidity of around 5,000 crores, which more because of our stable deposit profile and also less disbursement momentum. So currently our liquidity is around 7,000 crores. So we are carrying around 3,000 crore more liquidity, what Sajay mentioned in his preliminary statement also. So we are putting some additional cost on liquidity, but we are fine given uncertain time. But in terms of our ALM profile, it's broadly matched what we have mentioned earlier also. So within regulatory and board approved limits, we are maintaining our ALM statement.
Okay, thank you.
Thank you. We take the next question from the line of Chirag Sureka from TSP Mutual Fund. Please go ahead.
Hi, sir. My questions actually follow from the previous set of questions. It's around the deposit base. there is both growth in retail as well as wholesale deposits. So on the wholesale deposits, what I wanted to know is that there were other private sector banks that faced volatility in deposits in March and April post the Yes Bank issue. Did you face any volatility, or what is your customer base there? Again, I wanted to know your secret sauce in retail also. In terms of, it's a strong growth. And so what are the demographics of the customers? Are they second account holders, senior citizens looking for a higher rate? What is your strategy on retail deposits? Thank you.
Hi, Chirag. Shubhdeep this side. I'm the Chief of Product on liabilities with AU. So two parts of your question. One, whether we faced any volatility on the wholesale deposits after the Yes Bank episode and during this period. Obviously, whenever any, impact in the banking industry like the Yes Bank situation or PMC happens, we being a SFB, new players, in the banking industry, there is a question in customers' mind. But like we mentioned in our last quarter call also, we were very proactive in terms of our engagement on the ground. Our larger book has been retail and we operate our geographical spread has been balanced and largely focused towards our core markets, because of which we actually grew in that period of March also when that entire Yes Bank crisis was going on. There were certain questions from certain institutions which were, typically where the decision makers were larger, but then all those questions were answered basis our proactive engagement with the customers, and practically there was no stress observed during that period of time. Then our larger focus this year, as we have also shared in the initial commentary, has been towards the retail growth. This quarter specifically, if you see, we have practically not grown on the wholesale deposits or the bulk deposits at all, and that has been intentional. When you see my deposit growth quarter on quarter 4%, this deposit growth easily could have been much higher, but we intentionally took the route of not taking rate-based high value deposits or bulk deposits, which are usually rate-oriented in nature and not relationship-oriented. The entire focus is to build relationship-oriented granular retail business on ground, which is reflected very clearly in our retail deposit and savings growth this quarter. You about the color of the deposit or the profile. Yes, senior citizen being an important part of the India's demographic deposit profile, it is also an important profile for us. But it is not largely rate oriented, because if you see my retail rates are very competitive in the industry. I am offering my retail deposit rate or the savings deposit rate at par with the next in line after the top 4 banks in the country. And that is a completely engagement driven or a transaction engagement driven approach by which we are acquiring customers on the retail side. We have moved strategy towards acquiring profile based, a little more quality oriented acquisition. So yes, we are focusing on profiles like doctors, housewives. We are focusing on professionals. We are focusing on segments where salary segment. We have specifically, defined direct acquisition channels for NR, which is a very important profile in the savings landscape. Task business, which is trust in association, societies and clubs, is an important part of our acquisition strategy. Apart from that, these specific profile-oriented businesses are something where this entire year the entire focus is on, and this will be completely retail and granular in terms of acquisition and relationship engagement.
Okay, sir. So to summarize, you're just basically spreading your wings along the various of your initiatives is what you're saying broadly. Just that and just focusing on that.
Yeah.
Okay, thank you very much.
Thank you. We take the next question from the line of Ravi Singh from HSBC. Please go ahead.
Yeah, hello. So again, question on this slide 25, 26. Is the right way to look at it is that, for example, on SPL, if 67% of customers paid full, they also made payment for their previous EMIs, and hence the overall collection efficiency is higher at 95%. Is that the right way?
Yeah, that's absolutely right.
Okay.
Yeah.
And when you say that, average monthly basis customer paid full is 80% and 5% part, so rest 15% are those customers which, by habit miss one or two EMI and then later on pay together before becoming NPA?
Yes. Correct.
Okay.
Comparison is basically 18 to 67%, right? So in a normal month also, we only expect 80% people to pay us.
Okay.
And in the month of June, 67 people paid us in spite of the write-off moratorium. So the comparison is that, that normalcy is coming up. And, the main challenge at this moment is only about forecasting your asset quality, right? We all know that India will have growth, India will have need credit, right? But it's just a matter of time when this pandemic gets over or we all control our fear around it, that will come. But I think the damage can be only around asset quality because of that 2-month lockdown. But I think that I'm very sure that it is not that large level. The June data showed that, and of course the July and August. Will again reinforce that as soon as normalcy is coming in, people have sustainability, people have resilience to pay their debt. So I think that's a great sign, honestly. That's a great sign.
Okay, understood. Thanks for this.
Thank you. We take the next question from the line of Abhijit from Kotak Securities. Please go ahead.
Hi, good morning. Thanks. First question is on collections. If you could quantify the absolute amount of collections in the first quarter. And a related question is if you could also share the inter-quarter movement of the moratorium book at the end of April and May. And a clarification on moratorium is would it be fair to assume that the 25% of AUM which is not paying either part or full also includes the moratorium book?
No, so our standard moratorium is still very open because it's a very continuing, evolving story. As you know, moratorium is started from March, right? So people opted out for moratorium in the month of April, but they paid us in the month of maybe May and June. Somebody paid in April, somebody opted out in June, July. So for us, it's so difficult, honestly, being a retail asset or organization where to assess who is taking moratorium is not taking moratorium because it's so difficult to actually get a hold of customer and ask him that give us an application or give us all those things. So we haven't gone to that way. We have said that our old 10% people, we consider them as a moratorium because they haven't paid us, right? Otherwise, other than that, the customer are paying us and those customers are zigzag, right? So I think the final call on moratorium would be only taken on 1st of September if moratorium does not get extended, right? On that day, the AU has the philosophy to talk to their customer whether they want to reschedule their account for future period or they really want to have a default and pay us as a default customer, right? So it's difficult to answer as of now. We have given our clarification around 10-11%, which is a complete moratorium. And the other question I'm not able to understand.
Collection for the quarter, 2,200.
Okay, so the actual number you are asking is
So actual number, what we could understand from your question is you want to know the actual collection being done amount-wise in the last quarter. So so that is around 2,200 crores.
Okay, so just sorry to insist on this one. When we look at the ALM tables in the annual report, the scheduled collections were somewhere around 1,300 to 1,400 crores. So just a little surprised given the difference between the two numbers.
I'm sorry, which table you are?
Okay.
No, you must have seen in the ALM table you are saying the 1,300 crore number.
Yeah.
1,300 crore because ALM you have to show the schedule. So since lot of moratorium has started from 27th of March, so in ALM we only take a part of those payments which are actually due through system. So a lot of customers have paid later on who have taken a moratorium earlier. So in LM profile, you cannot show that this amount is scheduled to be paid once the customer has opted for a moratorium.
Got it. Sir, second question is on the Wheels book. If you could share the disbursements in the cash on Wheels, and would it be fair to say that the entire cash on wheel book is towards the existing customers?
In this quarter, cash on wheel, nothing.
Bhaskar here, Abhijit, firstly, we did not disburse anything on cash on wheels in this quarter because that was a pre-decided decision, number one. And number two, yes, you're right, that it is more often than not to an existing customer, yes.
Just, Bhaskar sir, just further clarity on this would be, what would be the overlap between customers using cash on wheels and those availing the moratorium?
The customers who are using moratorium are not much different than whatever is my book. It is behavior pattern is same, Abhijit. No specific spike or down. Same behavior.
Okay.
Yeah.
And last question is, how big is the non-SLR book? And is it fair to assume that some of the NBFC exposure is now kind of shifted to the investment book, given the loan book has declined sequentially?
No. So honestly, Abhijit, there is no sense around loan book versus investment book because investment book is governed by the whole investment policy, right? So of course, most of the NBFCs, most of the investment book generally goes into a larger NBFC with AAA, AA kind of rating, but it's not a balancing act which we are doing it. It's an opportunity. Like in TLTRO, the whole subject was only to do NBFC funding, right? So it's not related that investment book is going up or we are reducing our NBFC book. The both things are very separate in nature and in approach.
So Abhijit, just to add, I think our this non-SLR book is having either AAA or AA plus rated portfolios, being PSU or bank-led NBFCs. So which is completely different what we are doing in NBFC space, right? In our NBFC book, except TLTRO book where we had that right from regulator that it would be in NCD form only. So that is the only amount.
Understood, sir. Thanks a lot.
Thank you. We take the next question from the line of Vibha from FairConnect. Please go ahead.
So my question is again on this slide 26. Would it be right to say that 67% of the customers have paid in full and 11%, although this is number and 11% is by value, but broadly speaking 67 plus 11. So 78% are under moratorium or have paid, and rest are habitual kind of delayers and they will pay in time.
Again, we are interpreting too much, and I request every shareholder to really respect this time because this is very evolving situation where from March to August and the customer has right to not to pay us. It's their right? And customer is opting out every possible way to pay and not to pay, correct? So we are not doing any maths around it. We have just given you status as of June. So there would be a customer who would have taken a moratorium for 1 month, maybe for half an EMI, maybe for full EMI, maybe everything honestly. So we need to wait for till 1st August, 1st September to be very honest, and engage with them. But my only suggestion or view is this, that there is a lot of good signs. You don't expect people to pay you now, but they are paying you. That's the only statement I want to give here, right? So 67% people, of course the 90% collection efficiency, which is as good as normal one, right? And this is only 1 month data. Only June unlocking. You believe in July and August, and if you're not in Mumbai, if you're not in Delhi, if you're not in Pune, you're not in Surat, the semi-urban, rural markets, larger markets has opened up, right? So I believe there would be a lot of sensibility around asset book portfolio in the month of quarter, in this quarter, right? So that's the overall message we want to give, right?
Okay. So what is your sense on overall credit cost for current year, given that 11% people are under moratorium and you said a lot of them want to pay but would pay? Is this provision that
very difficult to get any number, honestly. What we can tell you is this, that historically our data says year 18, year 19, year 20, we were around 0.35 to 0.4. We are secure, we do secure lending, we are around essential funding, we are small in nature, high in collection, high in touch and feel. So I would say, come this quarter end, based on the people who has want to reschedule beyond a point, there would be a lot of data analytics around the whole behavior pattern of this 6 months, and then we can assess and can judge. So I would request, give us one more quarter to have, in case moratorium is not extended, right? So then I think it will be right for us to comment. But as of now, I am not that worried around the NCL one, right? There can be delay, but not NCLs.
Okay. So would it be worse than Demon, or it will be at par with Demon?
For us, Demon never was worse, honestly. If you go and see our data, I pray it can happen like Demon. I can take it any day. So of course it will be. So if you take my honest view, I would say it will be worse than Demon, because Demon was only a very localized, or maybe it was around for some days and then people really come back. It has more fear, right? It has broken some continuity, and still some businesses are not up and run. Some places are not up and run. So, but I hope the whole government of India, RBI, and everybody is putting their effort to again build this continuity. And of course, this 6-month moratorium, in my opinion, is the best tool to manage this continuity. And so that's why I'm saying you that people are reading too much around moratorium. That if somebody takes moratorium, it will default. That won't be a case, honestly. So I think we need to be a little patient enough to our customer and then really comment in quarter 3, quarter 4 on the real impact of this pandemic.
Okay. Thank you.
Thank you. We take the next question from the line of Rohan Mandora from Equity Securities. Please go ahead.
Sir, thanks for the opportunity. So, would it be possible for you to share, out of the 4 months of collection that have happened from March till June, what percentage of customers would have paid all 4 or 3 EMIs by value?
Brother, I'm again repeating, when customer is not supposed to pay.
Right, but so just trying to understand, because 11% would have not paid anything from March, and remaining they are making some payment. So just to get some color on what percentage of customers would have made all the payment. Some idea on that.
Comment as of now, and we can talk offline or wait for quarter 2.
Sure, sir. Also, sir, in case you can share some color on within the commercial segment of the passenger vehicle piece, like the trend that you have shown on slide 25 and 26, what would be the numbers for that segment?
I did mention a little earlier that commercial taxi, this is Bhaskar here, sorry. Commercial taxi is a shade lower than commercial loading. Commercial loading, we do not do much of anything. We have a very small book. My commercial loading is primarily a small commercial vehicle, and that too is more rural, and hence that has not got, that collection efficiency is in fact same as our regular one. It is only the car taxi part which is some percentage a bit lower than the normal collection efficiency that you have seen in these, and that's pretty obvious. It will also come back once everything gets back to normal. That will also kind of go back to where it was.
Sure. So in case qualitatively you can share what kind of income trends are you seeing in that segment? Because what we are understanding is that still the incomes are very challenged for that segment across geographies.
Yeah, silence is because in Bombay, Siddhivinayak is closed, Mahalakshmi is closed, church is closed, marriages are not happening, people are not going for dinner. So the view that we have is only Bombay, but it is not so in Sikar. It is not so in Junjunu. It's not so in Latur. It's not so in Satara. I mean, people are moving. Sometimes they carry people, sometimes they also carry some goods. They manage to manage. These are all drivers come owners, so they are not really sitting at home and waiting for something to happen. They are doing something, and they do something, and they are since he's a driver come owner, his takeaway is not looking at profit, he's just looking at sustainability. Somehow, let me try and pay the EMI so that moratorium has a cost. We go and explain that to him. He understands, and in some form they manage to pay from their agri income, or they take a loan from their father and things like that. So that is the real picture on the ground.
Sure, sir. And sir, lastly, on the deposit side, roughly around 8,000 crores of deposits were refinanced on a quarterly basis, and this quarter around 10,000. If you could share what is the split between, say, the retail term deposits and wholesale in this? And also just an addition on that, and as for the ALM, the number of proportion of deposits in less than 1 year as of FY20 end has increased to 70% vis-a-vis 62% last year. So any specific strategies that we are following to increase the longer tenor deposits incrementally?
So, Rohan, in terms of deposits, if you see, from a strategy perspective, the bucket which we are driving specifically is the 18 months and above bucket, where if you see my retail term deposit is a peak rate, that is 18 to 24 months, 18 to 26 months bucket. And that is, in the current situation, when you see downward interest rate scenario, that is the right bucket, optimal bucket to be placed from and specific to our asset profile which we have, right? From a, if you see slide number 19, it talks about the retail deposit profile in terms of the percentage, where you see that our, share of retail term deposits, the way we have been increasing year on year, quarter on quarter from that perspective. So this quarter itself, see there is an incremental growth of around 700 crores on my retail term deposits. And like I mentioned some time back, the core focus of the bank is to build retail granular deposit base with larger focus on CASA this year. Our first 3 years of strategy was largely around deposits, where we have built a good foundation of overall deposit base now. And now we need to scale up in terms of customer engaged accounts led by CASA, by digital and the overall ecosystem around digital payments to ensure that customer is active in transacting with us.
Sure, sir. And sir, a mix of refinance within that quarter between retail term deposits and wholesale out of 10,000 crores. The data will be given slide 5.
So when you say refinance, do you mean by renewal?
Yeah, because the term which is incremental funds raised during the quarter is 10,000 crores in Q1FY21. So, and that was 7,700 crores in 4Q and 8,500 in Q1FY20. So just how is the split between, say, wholesale term deposits and retail between this incremental funds raised?
So Rohan, it's not only deposits, there are other means also, because it's fund raised. Actually, it's not deposits. So we got some refinance also from financial institutions like SIDBI, NHB also this time, because they were coming up with their special refinance schemes during this time. So we got some amount from these institutions also. So that amount is also included in this calculation.
Sure, sir. And so just 2 data points. What is the headroom for further PSLC sales during the year? And also any unbooked MTM treasury gains on which we are sitting on for the quarter, at the end of the quarter?
So both are evolving actually, Rohan. So we'll figure out our situation, how we will go. We'll see our disbursement plan, collection numbers, and basis that, and also our PSL requirement, which is 75%. And then we'll see again what we can do. On MTM side, again, it's again evolving situation, right? So this interest rates are on declining trend. So we will assess our overall investment position, and basis that we will figure out if we have to do something, right? So we'll figure out with the quarter actually.
Sure, sir. Thanks a lot.
Thank you. We take the last question from the line of Manish Shukla from Citigroup. Please go ahead.
Yes, thank you for the opportunity. So we saw this big uptick in activity in June. but there are some data points suggesting that momentum has slowed in July as virus has spread beyond the larger cities. Do you see that happening in terms of the economic activity in the areas where you operate, that last 3 weeks in July have probably not been as great as what we saw in June?
No. So hi, Sanjay this side. So as I already commented that people have actually started living with this kind of fear that, the COVID-19 will stay here, right, for some time. But that should not now hamper their general activity. So in our area of operations, barring Pune, barring Mumbai, and barring Surat, there is a partial lockdown maybe in Bhopal, maybe sometime in Ahmedabad, maybe sometime in some part of the cities, but that is not hitting the overall sentiment, right? So as of today also, our 95% people are coming and operating from office. This month also our collection efficiency, which is 90% in the month of June, can touch 100%. Our activation of a customer can go up by 72%. Can go to 72%. So I think what we are seeing every day that there is some challenge around the COVID and there is some solution around also. So people are really not discussing on a very daily basis. Our people are able to meet customer, are able to understand his business, his requirement. And this month also we have started doing disbursement, as a planned program. So I would say it's so difficult to predict, honestly. But if India continues this kind of spirit, I think we will not see that fear which was in April and May. And we as a country will start living with this. And come September, October, and there is a lot of discussion around vaccine and a lot of other treatments, then I think we will have a different mindset to handle this. So I believe I'm very hopeful that we won't be seeing the kind of April and month again, and there would be barring some parts and some areas where we can have this kind of impact. Otherwise, we are there to understand this issue and then live with this, right? So that's the overall comment on the situation.
Sure. And two small clarifications. Slide number 26, customer activation is by volume. That is, it's number of customers and not value, right?
No, it is a value. So just for example, if you are saying 67% and we have a book of around 30,000 crores, so that means it's around 21,000 crore of book customers are active. And
okay,
it's similar to number of customers also, to be very honest. It is similar to number of customers also. Exactly. It doesn't change much.
Okay, so I'm just trying to add up the math here. So 67 full 8 part, that is 75. 11% is moratorium. So what is the case with the balance 14?
So again, I'm repeating honestly that this is one data which shows that how the activity level goes up. And I'll be honest saying this, that if customers took 2 months EMI as a moratorium but paid 2 months, then how do you rate him? So for me, he's a good customer because even if he's having a right not to pay, he's paying you. So I think it's not a time of doing math. It's a time to do really the analysis around how much customers are coming and talking to us and want to pay their EMI, maybe 1 month EMI, maybe 2 months, maybe 3 months, and how they want to build their business again, right? So I think the exit data, I think you have to give us 1 more quarter. If moratorium gets closed on 1st of September. So then only we'll give you a bit of data that, how many customers, how much month moratorium they took.
Okay, sorry, the really last thing here, the 11% moratorium when you say, is it fair to conclude that 11% has not paid anything for last 4 months? Is that a fair conclusion?
Correct.
Okay.
Correct.
Okay, that's helpful. Thank you very much.
Yes.
So does that answer your question?
Yes, it does. Thank you.
Thank you. Well, ladies and gentlemen, that was the last question for today. I would now like to hand the conference to their closing comments.
Thank you, Janice. Thank you, everyone, for your time and for your valuable inputs to us. Please feel free to reach out to our investor relations team for any follow-up queries. I wish you the best of health and hope for better times ahead. Thank you.
Thank you. Ladies and gentlemen, on behalf of AU Small Finance Bank, that concludes this conference. Thank you all for joining. You may now disconnect your lines.